Good morning, traders. As of Monday, August 24, 2026, silver is trading at roughly $69 per troy ounce, holding a bullish bias while lingering just below the two-month high of $70 set on Friday. This price action follows a decisive breakout above the $66.65 $66.70 horizontal resistance and the 38.2% Fibonacci retracement of the May July decline, a move that technical analysts view as a shift in market structure. The underlying driver is a weakening US dollar, which has lost ground amid rising expectations that the Treasury will double its bond buybacks for 10 to 30-year maturities starting in early September. At the same time, heightened volatility in global bond and currency markets has pushed investors towards safe haven assets, boosting demand for silver. In short, the combination of technical strength and macroeconomic pressure is keeping XAG/USD in a bullish stance, setting the stage for the next leg up if the momentum can be sustained. Looking at the chart, the immediate resistance sits at the 50% Fibonacci retracement near $71.95, followed by the 61.8% level at $76.08 and the 78.6% level at $81.97, with the cycle high at $89.47 acting as a longer-term ceiling. On the downside, the 38.2% Fibonacci at $67.81 provides the first line of support, then the 23.6% level at $62.70, and the 200-period simple moving average at $60.93. Notably, the 200-day moving average, a key long-term trend indicator, currently stands at $72.03 as of today, meaning silver must clear this average to confirm a sustained bullish trend. The relative strength index hovers around 66, indicating strong buying pressure without yet entering overbought territory. These levels together create a clear roadmap. A break above $72 could open the path toward the $75.90 zone, while a retreat below $67.80 would test the recent support base. Over the past 7 days, silver has rallied for 3 consecutive days, gaining more than 7.4% for the week ending August 21, 2026. On Friday, August 21, the metal tested the psychological $70 mark and printed a 2-month high of $70.02 before pulling back slightly. This surge was sparked by a flight to quality move as investors reacted to the U.S. fiscal stance and a softer dollar, despite the greenback's underlying strength. Additionally, the U.S. Treasury's announcement to at least double its purchases of government bonds with maturities of 10 to 30 years, beginning in early September, has exerted downward pressure on yields and the dollar, further boosting precious metals. Market sentiment data shows 25 out of 26 technical indicators flashing bullish, with only one bearish signal, underscoring the breadth of the upward bias. These developments have transformed a range-bound market into a clear upward channel. Analysts are weighing in with a mix of caution and optimism. Haresh Mangani of FX Street noted on August 24 that silver is kicking off the week on a subdued note but stressed that last week's breakout through key technical barriers favors bulls, adding that a move beyond the 50% Fibonacci near $72 is needed to reaffirm the constructive outlook. J.P. Morgan Global Research, in a report dated August 13, forecasts silver to average $70 per ounce for the full year 2026, with a Q4 target of $63 and a 2027 average of $63. Citi analysts, dated August 17, have a near-term target of $75 an ounce and expect silver to reach $90 within 6 to 12 months, citing potential increased investment demand. CoinCodex, on August 23, projects an N2026 price of $104.63, representing a 52.06% gain from today's levels, and a 2030 price of $94.13. These varied forecasts highlight the range of expectations, from modest gains to aggressive upside. What does this mean for market participants right now? Active traders are seeing tighter spreads on XAG/USD as liquidity improves around the $69.70 band, enabling quicker entry and exit for day traders. Long-term investors who hold silver as an inflation hedge are benefiting from the price lift, which enhances the real value preservation of their portfolios. Industrial users, however, face a modest increase in input costs, though silver's share in manufacturing remains relatively small compared to gold. The stronger silver price also influences the broader precious metals complex, often pulling gold and platinum higher as safe haven demand rises. Furthermore, the rising price impacts currency markets. A stronger silver price tends to correlate with a weaker dollar, reinforcing the feedback loop that initially drove the rally. In short, the current bullish environment is reshaping trading strategies, portfolio allocations, and even macroeconomic sentiment across multiple asset classes. Looking ahead, the next technical hurdle is the 50% Fibonacci resistance at $71.95, closely aligned with the 200-day moving average at $72.03. A decisive close above this zone would likely trigger a wave of buying, potentially pushing silver toward the 61.8% level at $76.08 and then the 78.6% level at $81.97. Analysts from Citi suggest that breaking $75 could open the path to their $90 target within the next 6 to 12 months, assuming investment demand continues to rise. On the flip side, if silver fails to sustain momentum and slips below the 38.2% support at $67.81, the bias could shift back to neutral, testing the 200-period SMA near $60.93. Market watchers will also monitor the US dollar index and Treasury yield movements, as any reversal in those factors could dampen the safe haven appeal. Overall, the near-term outlook remains bullish provided the dollar stays weak and technical resistance is cleared. Beyond the immediate weeks, longer-term forecasts diverge. JP Morgan's more conservative view sees silver averaging $63 in 2027, reflecting expectations of a stronger dollar and subdued industrial demand. Conversely, CoinCodex's bullish scenario projects an N2026 price of $104.63, driven by heightened investment inflows and a potential silver shortage. The key variables to watch are U.S. fiscal policy, especially the scale of Treasury bond buybacks, and global risk sentiment. Should geopolitical tensions rise or bond market volatility increase, safe haven demand could keep silver elevated even if the dollar rebounds. On the other hand, a rapid dollar strengthening coupled with easing inflation pressures could reverse the trend, pulling silver back toward the $60-$65 range. Investors should therefore maintain a balanced approach, using technical levels as entry and exit points while keeping an eye on macroeconomic cues that could shift the bias. To wrap up, silver is currently trading around $69, buoyed by a recent breakout, a weakening dollar, and safe haven demand. The metal faces immediate resistance at the 50% Fibonacci near $72, with support at $67.80. Over the past week it has posted a 7.4% gain, and analyst targets range from a modest $63 Q4 level to an ambitious $104.63 by year-end. For traders, the key is to watch for a clear close above $72 to confirm the bullish trend. For long-term holders, the outlook hinges on whether macroeconomic forces continue to favor precious metals. Remember, no single forecast guarantees outcome, but combining technical analysis with an understanding of dollar dynamics gives you a clearer edge. If you found this breakdown useful, please watch the video to the end, hit subscribe, and turn on notifications for more timely market insights.